Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Wednesday, September the 7th, 2011. Well, a change of trend today, and we have a candle that's made a higher high and a higher low. A very large green-bodied candle today in contrast to the previous 3 trading days where we had red-bodied candles and a trend to the downside. So a very bullish candle today. This is the most bullish type of candle that you can have, where the buyers have, the market has opened up at the low and closed up towards the high. So the buyers have been in control of this market for the entire day. Previous day's trading, we had a small-bodied red candle with a very large shadow on the bottom. The shadow represented the sellers losing commitment down around amongst all of these support levels, and it was a hammer type pattern, reversal pattern, and did suggest potential for a change of trend, and that's exactly what happened with the current candle making a higher high and a higher low. Now, this market has traded up through a few key areas of resistance. The first was at 1173, where the previous day's candle traded to and then sold off, not in a substantial way. The market also traded through 1183 and is now testing the round number resistance at 1200, and that will be a very important area for this market for tomorrow's trading. Above there we have resistance at 12.19, and around this important swing high at around 12.32. This is an important swing high because it's an important peak in the continuation of the second time frame trend. And if you look here, we have a trough, a peak, a higher trough, and a higher peak as the market took out this area to establish that second time frame uptrend. Here now we're making another higher trough, and we have potential to make another higher peak if we take out the area around roughly 12.30, 12.32. Now in Ichimoku charts terms, this market is trading down below the cloud still, so we do have an overall negative bias, but the market has tested above the Kijun-sen, which means that technically we're just bullish in the medium-term time frame, although still quite neutral by trading very close to the Kijun-sen. The market is bullish in the fast-term time frame by trading above the Tenkan-sen, the green line here. And we have tested above there on a few occasions, and for the previous few days trading, we just closed down below there, and the market couldn't maintain price action for more than those 2 days down below there, so that could be significant to continuation of this rally that we're seeing in the second time frame. Now, obviously, for the next day's trading, 1200 is very, very important. Certainly watch around 1163 for any potential to test lower levels, but a very bullish candle that will most likely test the 1200 and above. If we do see selling coming in up around there, then there is potential for a sell-off once again. Now moving on to light sweet crude oil, and we can see very similar to price action to the equities market. And we have a very large green-bodied candle. Previous day's trading was a small red-bodied candle where we had a large shadow on the bottom, very similar to what we saw with the S&P 500, and a hammer-type pattern, and did set the market up for that potential change of trend, which we've seen today with a very large green-bodied candle. However, with this candle, we have seen the market trade off from resistance at the 90 level, and that was an area that we highlighted previously. It held roughly 3 or 4 days ago as resistance again, and the market sold off. So it's a very important level for this market moving forward. The shadow on the top suggests price rejection to the downside, and it suggests the buyers losing commitment as the market tested up around that level. So very important. We do also have the market trading in this second time frame uptrend, and this market has actually taken out the previous peak, making a higher peak, so confirming the strength in this trend to the upside that we're seeing in the second time frame, which is a little bit different than we've seen in the equities market. So this is confirmation for light sweet crude oil of a strong trend. Now, in Ichimoku charts terms, we are trading down below the cloud, so the market has an overall negative bias. We are, however, trading up above both the Kijun-sen and the Tenkan-sen, so that's fairly important for this market, that for the first time in a while we're trading up above both of those indicators, so there is good potential for the market to trade to higher levels. So in 2 of the time frames, in the lower time frame and the faster time frame, bullish but bearish overall in the big picture terms, and the Chico span here is trading below the corresponding price action, so that's confirming the overall negativity that we're seeing in the market in big picture terms. For tomorrow's trading, the area around 90 is very, very important if this market is going to continue to the upside, and there is good potential for that for us to test up above there. We have seen a very bullish candle. We haven't seen this size body in a candle for quite some time. It was quite a few weeks ago when we saw a candle that was of a similar size, and there is good potential for this market, which has built up some decent upside momentum. Obviously, to the downside, we do have solid support down below around 85.11 and 84, but we did see strong price rejection around that 84 level and just below. So if the market does come off, then we should see decent support hold there. So tomorrow's trading, 90 is very important for this market. Next, moving on to gold, and we can see that we've had a change of trend to the downside, a candle that's made a lower high and a lower low. Previous days trading, the trend was up, and we had a spinning top type candle, and very often spinning top type candles are candles of indecision, and they do set the market up for a potential change of trend, and that's exactly what's happened here. Very small bodied candle with a large shadow on the top and the bottom, and the shadow on the top represents downside price rejection, and the shadow on the bottom represents upside price rejection. Previous days trading to that, the bulls were in control, and then they've lost control of the market with this spinning top type candle. But by the same token, the bears failed to take control. Today's trading, the bears have certainly taken control of this market with a very large red-bodied candle. They've failed, however, to close the market down towards the lows, and the market did test down below this important support and resistance area that we highlighted previously at 1814. We can see that the market tested on this occasion, tested just above it here and just around here, where it's now holding as a support level, and we traded to that area down below, and there was upside price rejection below that region where the sellers lost commitment down around there. So that level is very important for the market tomorrow if we are to continue with the trend to the downside. We have closed with the bulls in control, except that control is moderate. It's not very strong control because we've seen them fail to close down towards the lows, but certainly a fair way down below the midpoint level, so there is some good solid downside momentum. Very large red body candle with the sellers making very strong net bearish progress, and it's been a while since we've seen progress like that. This candle here is the last time we saw that amount of decent progress. In Ichimoku charts terms, the market is trading above the cloud and a long way above, so we're bullish in the big picture terms. We are bullish in the medium-term time frame by trading up above the Kijun Sen, which is the pink line here, so we're maintaining that bullishness, and we should look to that area as a potential area of support for this market. We've seen previously that the market did find support at that region probably a couple of weeks ago, so that's an important level. That's at 1768, so if the trend does continue down, look to that level of support. Certainly look to 1723 and down to 1683 as potential support for the market as well, where we tested previously when we had a strong sell-off. In terms of the short-term time frame, the market is trading just above the Tenkan-sen, the green line here, which means that we're just bullish in the short-term time frame, but pretty much neutral because we're so close to that area. So for tomorrow's trading, certainly 1814 is very important for this market. That's a very important support level. If we do take out that area, the swing low where we saw the market finally find that support, which was around 1791, is important, and certainly potential for strong support at 1768. To the upside, we have this strong resistance up around 1920, where the market tested to previously, and now we've seen price rejection from there. This has set the market up for a topping type of pattern. It's a very large ranging type of pattern. It's a double top, and when the market has potential to be a double top. That pattern will be confirmed if we do take out this intervening peak down here around 1700, and the potential target for that area, if we do take it out, would be the height of the pattern projected down from the breakup, but let's not preempt that yet. There is still a fair way to go if the market is going to test down to that level. If we do see trading similar to what we've seen today, then we wouldn't be trading down there for another 3 days or more. So, but there is strong potential for that a double top type pattern to occur.